Folks, welcome to Money Me. I do appreciate you guys being here and checking out my latest video. I've been making content on here for probably 2 or 3 years, but taking too long of breaks, but still interested in the market, investing into the market, and I'm always looking online, watching other people's videos, reading, and I just actually resubscribed to Value Line. If any of you guys are familiar with Value Line, I remember back in the day before there was the internet, I used to go and get the big $400 or $500. I think it was like $4.99 a year, and get the big thick Bible, I guess, of the stocks. And I just invested into Value Line 600. And what I like about it is basically being able to look at something print and get some feedback from professionals to really see and do some comparisons. And I'll tell you, I'm looking right here at PayPal again, and full disclosure, family members are invested into it, probably one of the largest holdings, and Facebook, we just can't seem to get over that $70 price point. We're back down to 63.43 as I make this video today. Down we had hit. I thought, wow, great. And it seems to be stuck in this range between 62 and 68. Actually, if you look at the chart, we've round tripped this thing since multiple times here, and we can almost go out since the beginning of January, and we keep on kind of like, and you know damn well the minute that you sell out here, you're gonna watch a week later, and all of a sudden that's gonna happen. That happened to me years ago with Netflix and PayPal. I just don't get it. It's according to the Value Line, it's 14.6 price times earnings based on their $63.19. And I look over here at MasterCard, and they're at 34.4 PE, and they're growing about 10%, which they say PayPal is about growing at 10%, but the expected projection return on PayPal really over the next 3 to 5 years, is anywhere from $120 to $180. So that is a 17 to a 30% return you would get on PayPal. MasterCard, basically a negative return or an 8% return tops. So we need to get PayPal a little bit more attention. I know they're doing a buyback. The stock has been down, of course, in my opinion, this week from the news from a firm. Just signed on with Apple to be featured on Apple Pay. If you don't know a firm is, and I know a firm because I see them when we go to Walmart, and they're like a company that wants you to finance buying that television, but I don't like the company because I think they just are outrageous. Recently, they sent me an email. I said, "Oh, okay, let me check it out." You know, if you're getting like basically rates of that are favorable, but honestly, if you can't afford a $300 TV, I guess you shouldn't be financing it. But a firm does the buy now, pay later loans, and they're doing a lot. It was something like the TV was something like, let's say $500, and they want you to pay back something like $800-900. And even if you pay it back early, a lot of these type places, you're not getting a discount. The payment is the payment is the payment. So if they say that it's $70 a month, for example, for let's say 16 months, and you pay it off, you're still going to pay the same amount. That's the type of product that I don't like that. I think they take advantage of people that are low income, and I see their revenue is up 50%. Their income is still $134 million loss, but that is up. But I really like PayPal. I'm going to pull up some numbers here. I have two screens going, and let's look at their. I think once we break out of really this 71, 72, here we were back around 77 of July 27, 2023 last year. If we can get, and the latest news that was that their quarterly looks like they're going to be above guidance, so we sort of keep running into that wall around 67, 60, 67, 69. So we need to break that, and then once we do, the next target should be 72, And then obviously the next target 76. I really think this is easily an $80 stock by the end of the year. But the torture of going back and forth between 62 and 70 is it can drive you crazy, especially if you have if it represents a larger position than you probably should carry. And then we start getting, once we break above that 76, then really we can go back up into the 83 dollar. So really the targets that we're watching is 63. I mean we're I don't think we're going to go below 61. We should see some sort of, if you see here we've been getting some buying, and they're going to be doing their buying. PayPal revenue for the quarter was $8 billion. Income was up 888 million. Everything, their net profit margin. So they had good. Let me. I'm using Yahoo Finance. Let me see what they're. I mean, they're doing. They have a huge buyback that they're doing. Their PE based on their earnings per share is around $4. They say they're growing it. So if they really can get closer to growing, closer to, instead of 10-12% growing 15 to 18%, it definitely should move the needle on the stock. I like it. I think it's a good stock. And they do loans for businesses, and been a PayPal customer with eBay. Now eBay used to be they were part of, and then they spun that off, and they do their own in-house. But they have Yahoo has a 1-year target of 76.44. That sort of seems to be the $80 sort of seems to be what the average target is. That was a 12-month target. I really think if we break through that 72 to 76, we should be. We're only here in June. We should be hitting 80 by the end of the year. One or two good quarters of good news going forward. That stock will, in my opinion, be much higher than it is today. And even with Value Line using it's $80, and over the next 2 years, 120. So I mean, even at 120, if it takes 2.5-3 years, you're still talking about 100%, close to 100% return in 3 years. Where are you getting that? We'd be, even at 15% return, we'd be happy if the stock was at 90 in 2.5-3 years. So I like PayPal. We're invested into it. They're doing loans. We actually just did a, we have a business where we sell things online, and they just gave some, 10% interest, and it's not. They do a little bit ones that if you take a little bit more, it's a little bit higher. But we opted to take the loan that we got with them at 10%. Let's see. I'm looking at their held by institutions, 72%. Share short is 23%. It's only 2% of, but they're doing a buyback, and their market cap is 70 billion, and the peg ratio 1.4, price times book, enterprise. So we really like PayPal. Guys, comment below. Tell me what you think. Are you a PayPal bull or a PayPal bear? And are you getting frustrated too? We are. As you can see here, it looks like we're maybe you're going to get a little bit more selling, and obviously I hope the market doesn't correct. We're in a time right now where the fight over inflation and the Fed and politics and stuff like that. If we get any type of pullback, of course, PayPal is going to pull back. So I'm hoping maybe we stabilize. Let's see, 2 days pullback, but it's not uncommon to get maybe we stabilize this week a little bit, and a couple more days, and again hold in. We just need to hold in this $65 range. But I really like PayPal. It's being used more often, more places. I actually have a PayPal business card and a PayPal regular card, so I'm able to use it just like a credit card. But even I have it where I can use it even one as a debit right out if I have money in there, and one as a credit against the loan that I got, and you use it in the store just like if you would Visa or MasterCard. So again, guys, tell me what you think. Give me thumbs up. I hope you like this video. Stay tuned. We are doing more content, I promise you. And I want to do content that well, everybody thinks if you have $20 million different versus if you're managing a small. I want to kind of talk to people that are looking to grow and start out. I started out at $50 a month and grew. I've been all things money here. Been in the restaurant business, a reseller, so I know a lot about money, good and bad. And I hope you like this video. And again, give me thumbs up and subscribe to the channel. It's free.